Welcome to The Interest. I'm Katie Jensen. Have you been uneasy lately about what's happening in the mortgage space? Well, today we have a special guest looking into David Luna's crystal ball. And just as you might be feeling anxious about what's happening in the industry, our own Vincent Valvo has a little reprieve with a poetic moment in mortgage. But first, it's been more than a decade since blockchain was introduced, and most people still aren't quite sure what this decentralized ledger technology really is. We all know about its most popular use case, cryptocurrency, and more specifically Bitcoin, with a market capitalization of over $500 billion. However, mortgage bankers have yet to truly embrace this system as an industry tool. Listen to our exclusive discussion about why that is.
I see blockchain as it continues to mature to be a tremendous tool to the financial services industry, and that includes home mortgage.
Proponents say the potential of blockchain is immense for the world of finance, but the system has proven it's not immune to hackers, and some analysts are questioning its accountability and reliability.
Insurance is regulated, mortgages are regulated. There's a need to be able to hold somebody accountable. And who do you hold accountable if the blockchain is, in fact, what is supposedly holding all this together? I mean, the whole idea is there is no central authority.
As far as its use in the title industry, blockchain has yet to prove itself as a game changer. When it comes to protecting money and personal information, the American Land Title Association contends that title insurance is still the best option.
Any way you store it, there's still going to be that threat that it could be hacked, it could be altered, it can be stolen, it can be changed, it could be fraud. And at the end of the day, you still need something, a backstop, to protect your property rights.
Right now, it looks as though the jury's still out on blockchain. Industry professionals do have doubts about its potential for wider use in mortgage banking.
It was a brilliant idea, and it has had a number of successful use cases. I think the bottom line is I don't think blockchain is going to transform the mortgage industry anytime soon.
To read more on this story, go to mortgagebankermag.com. For The Interest, I'm Christine Stewart.
Angel AI is revolutionizing the home financing process. Here to tell us about it is Pavan Agarwal, the CEO of Celigence, the company behind this new amazing app. Tell us how Angel AI is helping the home financing process.
We use empathetic AI technology, so Angel AI understands the emotions behind human inputs so that the application to approval to close of a mortgage is nearly free of human touch and free of human error, and is lightning fast compared to the manual standards of the real estate industry today.
What about the people who have found it hard to get a mortgage?
Angel AI has made the approval process for mortgages fair and transparent, such that we have cut the decline rates for minority communities by half relative to the national average. Just go to angelai.com or click the Ask Angel AI Now button and ask Angel AI your home finance questions, or simply ask her to send you one of these cool free t-shirts. Angel AI has transferred the home financing business and made it fairer and easier for everyone.
Much like the weather, inflation is finally cooling off. It still hasn't reached the targeted benchmark of 2%, but progress is progress, and mortgage interest rates have followed suit by declining week over week for more than 5 weeks now. The new conforming loan limits for 2024 have been announced by the FHFA. Many analysts' predictions were lower than the actual amount of $766,550, which is now the new cap for most of the country's single-family properties. In accordance with the Housing and Economic Recovery Act, this limit is adjusted year over year, taking into account the average price of a home in the U.S. With the nation's largest title insurer, Fidelity National Financial, being the latest victim of Lockbit 3.0's ransomware, the company has only acknowledged that a cybersecurity incident disrupted their title and escrow services. Cybersecurity threats are constantly evolving, and finance-related companies are having a tough time keeping up with the barrage of attacks. The SEC has issued new rules for cybersecurity management and late material incident reporting, which go into effect as soon as December of 2023 for larger reporting companies and June of 2024 for smaller reporting companies. Now is the time to reassess your cybersecurity plan and schedule a cybersecurity audit to ensure your company is prepared for the potential deluge of attacks that may be headed your way. As a licensed realtor in Utah, a topic that has been top of mind is the recent NAR lawsuit drama. We've all heard about how it will affect agents, but have you started to think about how it might affect you? There will likely be TRID issues with seller concessions. 2-1 buy-downs could be problematic, and there may be potential barriers for veterans trying to buy homes who are not allowed to pay real estate commissions. The one thing that we can count on, though, is that we know we'll be seeing more changes in the near future as guidelines try to keep up with these lawsuits and their appeals. I'm LaDonna Lockard. This is The Interest.
In the realm of loans quite diverse lies a curious plan, universe-versed. Reverse mortgages, they claim, offer homeowners a new game. But tread carefully, for they can be reversed.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.